EU sets out plans to curb reliance on the dollar in the post-Trump era. We are going to take a quick look at this article and the Forex pairs that might be relevant to this news item. We are going to look at some valid levels to look to get paid this week. This is the Forex Weekly Outlook. My name is Heath, and this is Trade Talk. So let's dive in. That article was posted by Alan. Alan is a very valuable part of our community. You can find him on Twitter at AlanAU11. All right. The actual article itself is it's a premium service, so you will not be able to actually get access to this article. Just follow Alan and you can get access to it. I'm not going to read the whole article to you. Brussels is set to warn that global markets are too reliant on the dollar as it seeks ways of curbing Europe's vulnerabilities to U.S. sanctions and other financial risks, and a challenge to the currency's supremacy just days before Joe Biden's inauguration as president. So let's get to the charts. We're going to start with Euro USD. So as you can see on Euro USD, we are trading in this channel. All right, I essentially took it off from the March scare when we had that liquidation event, taking out both sides of the market. That high, pinned with this high here, brings the top end of the channel. The low end of the channel, I simply just took from the lowest wick down and this wick here. TradingView loves to change my lines around for some reason. So as long as you're trading in this channel and not down below it, you are still postured to the bullish side. All right, so you still have a long ways to go to the downside before this thing would be considered bearish. All right, now with that being said, there are plenty of opportunities to short this all the way down to this channel if that's what you want to do. There is no problem with that. I'm not saying you cannot do that. All right, so the first level that I'm going to be watching for a resistance hold is going to be 1.21512. All right, we closed right at this market structure low here. All right, we closed right here at these candles, this bearish candles close and this bullish candles open. We did close right there. So we are at a pivotal spot in this market. So moving forward for the rest of the week, what I'm going to be looking for is I'm going to look for a little bounce from here possibly, and ultimately look to see what it does around that 1.21512 level. If we do get an 8-hour closure above that, my next area to target is going to be 1.2229, which is essentially this high from this swing high. There you found your resistance and you took off. So I will be looking for this to play some kind of role coming into the week. Now, if we open the markets and we're just straight up bearish and we just start heading down, we will be looking to target 1.19634. All right, and that is your near-term target. Your longer-term target, you could look for a resistance hold anywhere in this area here and look to get short, targeting the bottom end of this channel if you so choose to do so. I'm an intraday scalper, so I look for daily range expansions. If you want to swing trade and look for weekly range expansions, that is fine. You are currently in the middle of this channel, which means you are essentially in the middle of a range. So you definitely want to see some kind of resistance hold at one of these levels, all right? And if you believe that this is just a pullback to get long, thinking that the article is bullish, then you can look for this area to hold as support. All right, if this area fails as support, then possibly this area. As long as you're trading and closing daily candles above this channel, you are still postured to the bullish side. All right, moving on to pound dollar. Pound dollar was strong last week and week. It's trading in this range. Let's get rid of this. All right. Basically, I had some trend lines on here from its all-time high, and I will go ahead and throw that on the chart for you real quick just to kind of give you an idea as to what that trend line was. Now you can see that this did hold as resistance once, but then the market found support down here and traded up through it, broke out above it, and closed strong. The monthly candle was a strong closure up. Now let's go look at the weekly chart, and you can see where this was playing, with the traders trying to get them to bite on the short side. They absolutely bit. This thing broke up out of that trend line and so far is pushing higher. Now you can see that we had a weekly close bullish on the pound just means the pound is absolutely stronger than the euro. Let's go into a daily time frame and see if we can find some relevant market structures to play with. So this thing is trading kind of strange. That's just the pound. That's the way the pound trades. When the pound does get these moves of trends, it is a great pair to trade. But when it's trading like this, it makes it a bit difficult to gauge a direction. All right, so let's get rid of all these trend lines so that way I can get to work. All right, so basically what I see here is this is going to be the market structure swing high. Pattern traders are going to view this as a double top, and it absolutely could be. All right, you did get an 8-hour closure below this market structure swing low here. You closed below it, then you went back up into the 8-hour candle a little bit, and then you have since traded down. You did close right here. I'm not exactly sure as to what that area was finding. I guess you could say it was this 4-hour low market structure area here, because you did test below it, but then you closed back above it. So this area at 35870 is going to be your first support area to look for when the market opens this afternoon. All right, so the lower end of the range, if this wants to close bearish, or if it wants to pop up and find resistance somewhere, you can look for this swing low to possibly add as some resistance. Let's go see if we do right there a bullish closing hourly candle. So it's right above that 4-hour, which is also a swing low on the hourly here. So this is going to be a good area to look for a resistance hold if you are bearish on this pair. Do not try to short it here. You will probably get stopped out. All right, so wait for price to push up. If this thing's going to be remaining bearish this week, it will pop up to liquidate any short sellers on this swing high. All right, so it will liquidate those people. And this right here, this level at 36406 would be your line in the sand. If you close 1-hour candles above that and are holding above that line, you are not going lower. You are going to test and try to take out that high at 37106. If you do show this as resistance, you can then target 35260, which is, you know what, never mind. Let me do this real quick. Let me just use these bottom wicks here. You do have a bearish closing candle and an uptrend right here. So that would be your first area to look for. But ultimately, I would assume you would get a wick down here to short these people out. Or if it is going to have bearish continuation, to use that as fuel to continue the trend lower. All right, XAU USD, gold. All right, so gold, we broke up out of this area. There were a lot of stops up there. We were looking for that to happen. It did happen. However, something else happened, because once we got up here, we sold off hard. And this was an area, a market structure swing high. That is what held as resistance. All right, you can see you did not close a daily above that level. All right, so this is strength. Not strength, it's strong weakness is what it is. I know that's an oxymoron. This is very weak, essentially meaning you had a bullish push, a nice strong bullish push. Once you got up into this area, sellers or profit takers or whatever initially instituted this first red daily candle, and you have had nothing but continuation since. You got down there this week. Last week we traded sideways in this area. So pattern traders are going to be looking at this as a bear flag, and they are going to be looking for continuation. And if they get that continuation, this is going to be your first area. But all right, so pattern traders are going to be looking at this as a bear pennant or a bear flag or whatever, and you are rolling over on a daily closing basis. You have not closed a daily candle below this market structure low here. All right, so the bulls are, it looks like, trying to defend this level, and that level is 1827.059. If you get a daily closure below that level, I would look to short any retests of that level, or possibly up here at 1845.272. All right, if you start closing daily candles above this area up here, above this market structure swing high, at 1854 spot 738, you are going to be retesting that trend line again. All right. And I also have to say with this formation that we have here, if this holds that support down here and you get a bullish push up to this area, you are not looking to buy this market until you are closing daily candles above this trend line, because sellers will be looking at this as a lower high to short into. All right, so any sellers that sold up here and took profit down here, they will be looking to re-enter their position here. So do not buy this thing until you get strong daily closures about this level and a retest and a support hold in this area. That is when you could look to be a bullet back in this market. In the meantime, you have this leg down, this bearish pennant pattern, or this bear flag, whatever you want to call it. However, if you take just a random push down here, you are going to be looking for that as another leg lower for this pattern. If it plays out, I do expect this is the target at 1764 spot 570. That is the target, is what it looks like. So moving forward, this is not a buying market. You absolutely need to wait until you see obvious signs that bulls have regained control of this market. They might regain control of this market here. We won't know until we see more data. XAG USD is exactly the same thing. It done exactly the same thing. However, you are still on the bullish side of this trend line, unlike gold, which sold off. You can see that the current area of support is 24.77, and it is coming from what looks to be this swing high here, all right, on a daily closing basis. So that is your area there currently. If you get a daily closure down to there, you will probably be testing 23.93. If bulls get control of this market right here and you get a daily closure back above this market structure level here, then you can look for possible support holds around this area if price comes back to retest it. That would be the line in the sand for me as far as looking for bullish entries, because you do have a strong leg down. This is consolidation. So sometimes price likes to move in the direction after the consolidation in the original direction it was heading to when it went into the consolidation. So those are the levels to wait and watch for. CAD Yen. I'm not going to go over Dixie, guys. There's no reason for it because Euro USD is almost inverse to it. It's not 100% correlated to the inverse side, but it is very, very correlated. So whatever happens on Euro USD, you can simply apply that to the opposite direction for Dixie. Now, CAD Yen hit our target last week. This was our target for last week. We did get that, and then an immediate sell-off after that hit. This is still structured bullish. I see no reason to be worried about this yet. So as long as you're trading above this trend line here, you are still structured to the bullish side. All right, so you can look for support holds. Let's go into a smaller time frame chart to get those areas. So currently our first area of support is 81.526, this level here, simply coming from the lower end of this market structure swing low. All right, and that currently did get a test below it. Now with this big wick underneath of it could mean that this could be looking to trade down to this area here and test this market structure swing low right here at 81.249 to see if it get a resistance or a support hold there. All right, when you have a long wick that blasts through an obvious level like this and then a strong close back above it, doesn't always necessarily mean that bulls have regained control. All right, all this could possibly mean is price is probably or maybe going to retest this level as resistance from the underneath side of it. All right, so I am not going to be looking for any trades on CAD Yen at least until Monday or Tuesday, because this area needs to suss itself out. USD Yen is on my chart. USD Yen used to be my favorite pair to trade, guys. Used to be, because as you can see here, if you go back and look on a longer time frame chart, you can see this thing used to trend so beautiful. You could literally get in a nice trade on this thing and it could make your whole year. So let's go down into a daily time frame just to show you what's what. So you have found support at the low end of the channel, and you have closed daily candles above this market structure swing high, this lower swing high. All right. So you have closed above that, and you are currently holding support at 103.752. So moving down into an 8-hour time frame, we will see what's going on. You are creating some kind of pennant pattern, some kind of triangle here. So it looks like this thing will probably be range bound until you get a breakout above or a breakout below. Either way is a tradable event, as if you get a breakout above or retest and hold a support, you could target the top end of that channel. If you get a breakdown below, would be the better, in my opinion, the better risk to reward, because you have a long way further to go down to hit this swing low down here to be a target ultimately, and also the bottom side of the channel. But this was a kind of a strong push coming out of there. It is obvious it's tied up with the bullish move that you had on dollar last week. So let's just wait for this to break out of this small term pennant pattern here. Euro yen made me look like a chump last week. It's all good. I'm not right all the time, guys. You're never going to find anybody that's right all the time. It doesn't matter who you look for. It just can't happen. It's impossible. The reason I was looking for bullish lower high or higher low support to be held and then a push up higher was because we were bullish when we come into this and made this consolidation. And a general rule of thumb in technical analysis is look to trade in the direction of the trend. And currently that trend was up. But we have taken out this range to the high side and the low side. You could look for a support hold or a resistant hold around this area here, because it was holding as support for most of the week last week. That area is 126.211. If you get a support hold or a resistance hold there, you can look to short and aim for the week's low of last week. All right. So I'm going to take this off of my watch list now because it made me look like a chump. So it is grounded SPX 500. SPX 500 is bullish still. All right. You made an all-time high, you consolidated, and you pushed out of that area, which is okay, because if you look at all the bullish push or all the bearish pushes, every time it makes a swing high or an all-time high, it gets bought up. We don't know if it will get bought up again. That's what makes trading risky, is because we don't know what's going to happen. But we can watch what happens here. So I would look for my first area to look for a support hold at 37.27 or 37.27.90, which is this line here. Look for a resistance hold here, and then look for a trade down to here. Then I would ultimately be looking for a support hold here. Aussie yen. Aussie yen closed an 8-hour candle below this market structure here. All right, you got that on Friday. I took a trade on Aussie yen Friday. I was down on the week -2% because of Euro yen, because I was trying to inflict my will upon that market, and I was wrong. So I'm going to show you where I took my trade. All right. So essentially I was looking for this to keep heading lower because it had been trading like perfectly lower. It was in the support here, but once we broke out below that support, when we came back up into this area, I watched this candle first. I did not enter the trade because I wanted to see a lower close below this bullish candle, but we did not get that. We immediately went up and tested this 5-minute candle here. This is when I entered my trade. Once we took out the low of this candle with this candle's close, I got short, and my target was this area down here. Now, we didn't get all the way down there to that area. All right, we did not hit it. So when we started trading around in here, I exited 2/3 of my position. I moved my stop to break even, and obviously I got stopped out. But by taking this trade here, it allowed me to get back up into not positive territory, but break even territory. So I am break even on last week, and I will show you that trade now. Here is that trade. I took it on an hourly basis, or I didn't take it on an hourly basis, but when I took a snapshot of the image, it was on an hourly chart. So I apologize about that. I was targeting that line down there, and I will show you why here in a minute. But this is where I got short right here on this candle, and my stop was just right up here, so it was a little better than a 2-to-1 trade. All right, I risked 1 to make 2, so it brought me back up to almost break even. I was targeting this line down here because it was, all right, I was targeting this line down here. All right, that's where my take profit area was. You can see we did not hit it. We almost hit it, but we did not hit it. It was just this opening price of this bearish candle right here at 79.696. That was my target. So when I got short, we almost hit that target. But since we didn't hit the target, I went ahead and took off a piece or 2/3 of the position, simply because I was watching other markets like the NZD yen and everything else, and it looked like it was going to come back up and stop me out. So I moved my stop to break even. It was a successful trade, and we are moving on, and we are looking for that to continue lower, possibly. So anything trading against the dollar is going to be weak, as we had a bullish push on the dollar. But on Aussie yen or Aussie dollar, you can see you did not close below that daily low market structure there. This market structure here, you tested it, but you did not close below it, which is good. That is good. If I also draw this line here, you can simply see why this bearish candle stopped in its tracks. All right, it was because of this candle here. So you had this move, that was a good spot to get long, but then you traded in a range and you are coming back down. So basically you have made a high up here at top, not quite a double top. So we will see if this wants to come back up into this area here. We will first watch to see if 0.77338 holds as resistance. If it does, you can look to get short there, targeting this low right here at 0.76662. All right, this low, because we did not take it out on Friday's push down. So that is where I'm going to look to enter short, and I will be targeting this low. However, I am not looking to short this pair on a swing trade. I will look to see if this area holds as support, because you have some confluence with this swing high and this trend line. So this area down here will possibly be a good area to look for a support test and hold. Generally speaking, if you're closing the 21 exponential moving average daily candles above it, it is generally bullish still. So we are still generally bullish on this. It does look like a topping pattern, does look like it is trying to roll over. So more data is needed to make a positive directional decision on this pair. NZD yen has done the same thing as AUD yen, essentially. Let me get rid of this blue line, as I have no clue what that is for. You do have this area here was holding as support, and now we traded back into it. This low will be still a valid target. So moving forward, looking for this thing to hold as resistance here at looking for this to hold resistance here at 74.549, which is this line here. As long as you start closing hourly candles back below that, you can look for this target down here. However, if you were closing hourly candles above that, then you would have to assume that your target would be up here at 75.582. All right, guys, that's all I got for you. Make sure you hit the like button and subscribe and all that jazz. And trade safe this week. Trade safe. Trade safe, trade safe, trade safe. So trade smart this week, guys. Trade safe, and happy trading.